Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, April 11th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So today's key macro event is fresh evidence of our sticky inflation and China front-loading stimulus themes. The nuance there is that after months of buildup, the March CBI report officially disconfirmed the consensus immaculate disinflation narrative and replaced it with our sticky inflation theme. The March PPI report supported our sticky inflation theme as well. Elsewhere, China's March inflation data disappointed, which is positive for asset markets because it likely delays the PBOC policy pivot from stimulating aggressively back to more modest liquidity provision. In terms of market implications, in isolation, sticky inflation is not overwhelmingly bearish because neither the Fed nor Treasury seem to care enough to implement hawkish revisions to forward guidance or net financing policy in the near term. Both agencies likely need to see more evidence of inflation misbehaving and, more importantly, fresh evidence of the positive supply shock running its course to pivot. That much was confirmed by yesterday's Fed minutes, which indicated, quote, the disinflation process was continuing along a path that was generally expected to be somewhat uneven and, quote, the vast majority of participants thus judged it would be prudent to begin slowing the pace of balance sheet runoff fairly soon. Also supportive of the current risk-on reflation market regime was the March federal budget statement. The data supported our Jay and Janet want a soft landing theme because it indicated fiscal policy was getting less expansionary at the margins, which reduces the need for a hawkish policy pivot. Transitioning to our 42 macro dashboard, as always, we'll wrap up with a question from our community. This one reads CBI numbers and next steps. So Darius, if the Jay and Janet circus is the only theme standing in the way of a row sea change, row just means risk on to risk off, or risk off to risk on in market regime terms. Can we speculate on what potential levers they will throw in the 1 to 10 through 3 month time horizon? Thanks in advance for your response. So, the key answers here, the number one answer is, I don't think it's appropriate to speculate on what they could do. We need to speculate on what they are likely to do. And what they are likely to do, in our opinion, is continue to lean on the evidence of a positive supply shock in the U.S. economy as the reason that nominal GDP is growing above trend. And ultimately, as long as we continue to have that positive supply shock, the academic wonks at the Fed, and then obviously Janet Yellen being arguably the world's biggest academic wonk, they are going to assume that inflation over time, emphasis on over time, like Powell continued to emphasize at the most recent Fed meeting, over time we'll get back to the 2% target. And so with the vast majority of participants, seeing disinflation as an uneven, bumpy path down back towards 2%, they might be looking through this, the emergence of sticky inflation as a market narrative in a way that prevents them, or at least the bare minimum delays the forward guidance from pivoting from rate cuts to maybe higher for longer, even rate hikes, or causing Treasury to pivot to more onerous net financing policy through the lens of more bond supply and significantly less bill supply in terms of how that would impact U.S. liquidity conditions. So in our view, we think the Jay and Janet want a soft landing theme is still ongoing. Once you remove that theme, it's going to be very hard pressed for asset markets to remain in a risk-on condition. And so, in our opinion, it's all about monitoring the evolution of the elements of the positive supply shock that we continue to observe on the U.S. economy. Check out our modal outcome section from our April macro scouting report for more details. That was published Friday to 42 macro subscribers. So we'll wrap it up there. Darius Dale presenting our macro minute for Thursday, April 11th, 2024. Everyone have a wonderful day. Best of luck out there. We'll catch you back here tomorrow. Cheers.